Good afternoon, Scott Redler T3 Live. Welcome to today's recap. And wow, well, another day. Expect the unexpected. I guess that's the mantra. From yesterday being down 1,100 points in the first 4 minutes to basically taking half back by 9:45 and then almost only being down 100 to then closing down 600-700, then opening up 500 to then holding most or the majority of the day, and then a huge rug pull slash rollover. So with all that being said, you got to really be careful, and you also have to know what you're doing, and you also have to have levels mapped out. In today's morning call, we talked about what could happen today. Will we hold the gap up? So we want to write down the 30-minute low or maybe the 90-minute low to trade against, because if you break that, who knows where you go in that gap. And then as far as resistance, does the market have enough power to take out yesterday's highs? And if it does, could it see a little bit higher? And will we be working off the oversold condition? So for me, I came in long spiders, and we talked about that. I tweeted yesterday probably around this time when it was trading on 188. And then 195 and change, sold some, held some, and then when it broke that 193, trade for me was over. There was lots of different trades along the way. In the beginning of the day, I think most guys made some money shorting the up opening like Facebook and Netflix, some of those. We talked about some resistance levels in Apple, which is where it went to before failing. And then really the majority of the shorts that made money were those that shorted the open and broken trends because they've been broken. They were just up with the futures, and with time they faded. But anyway, you go to the chart here of the SPX, and this is the trend or the most recent one that we talked about that broke right there. Okay, this range that we stayed in for 7 months resolved to the downside below that that 2040. And we came in, held these October lows, and the question was, what would be next? As you look here at the SPX, and you will see what we isolated was what? Yesterday's highs. Could we get over it? Some might have shorted versus that high, saying, I'm going to short, give it to yesterday's highs. If you did, you got paid handsomely. Or you use your 30 to 90-minute stop rule. So let's talk about the spiders and show you what that is. So the first part of the day, okay, go to your 5-minute chart. You will see that you have a big gap up. Let's get this over here. So here is your day. Okay, this is your gap up. Okay, that is what you could trade against. In the first 90 minutes, this was the low. Okay, then you draw your line across the board here. Okay, so you go like this. Basically, this is your gap up. All right, first move was a fade. I remember actually trying to buy a little bit, didn't do it until here, so I added to it. So there's your fade. You still have a nice size gap here, so this is your pivot. You write this down, 192.98. Then what happened? You had a quick move back to the highs. If this was a daily chart, you'd say, ooh, a red dog reversal after 4 up days, took out the high in reverse. So that would be a spot to take some profits if you were long here. And then all of a sudden, it did that, roll down, roll down, roll down, roll down. And then once it broke this spot, if you were still trailing some longs from the gap open after selling some strength, this was your out. And if you use that, because you don't know what happens after a gap fill, you did just fine. Look at that. Boom. Came back up. Never really got back above it, and melted into the close. So some guys might have been short that, that gap break there. Did it here and said, I'm going to try it again. I think some of us tried a little bit of a long into this, thinking maybe it can go again, and then look at this, another little red dog reversal, pushed through, failed, and then you could have at least used this as your stop. So here is support 1 that failed. That was the whole afternoon support, and then you had to move lower if you tried it one more time, which wasn't the end of the world. Maybe you bought a pull-in thinking we were going to close okay, which I actually thought we were going to close okay, but you don't know what's exactly going to happen at all times. Then you had this 191.78. That was the pivot. I think somewhere in here, I tweeted to my Redler All Access. I'm like, you know what? If you sold strength early in the morning, maybe you buy a little bit in here and use 191.78 as your stop. That's 60 cents. 60-cent stop. Then this happened. Maybe you sold some strength into prior resistance and then got the heck out of the way when that happened. And then all of a sudden, pow. Pretty nasty. This is a nasty, nasty rug pull. Closing down near 187. So now you go to the daily chart. We have the spiders. Same thing. I think the chart I tweeted this morning was showing you where resistance would be. What could happen this morning? Resistance 1, resistance 2, and then if the market wanted to at some point in the next few weeks retest this broken channel here, that's resistance 3. So what did it do today? It did not get above yesterday's high and closed in the bottom, end of the range. So if it was going to be any good, it probably should have held the top third for maybe more upside. Instead, it closed on the dead lows here. So there are probably some people that would go out short, thinking that today was a massive failure. Okay, if that's what you do, great. I went out flat just because, of the size of the move that we've seen so far coming into this spot. I still think there could be some sideways action in this area, before it decides to break this. Maybe we get a higher low tomorrow, depending on how we open, who knows. But all in all, this trend is broken. When trends break, the action breaks. We're still below every moving average out there. You had a great trade if you bought in the hole yesterday, and you had a good trade if you shorted this trend in front of yesterday's high yesterday, or if you just took it off if you had it long overnight. For now, it doesn't look great. Let's go to the Qs. What did it do? Qs actually held up a little bit better. Okay, actually, I don't know how much of a real trade that is down there, but bottom line is it too still below every moving average, still below the trend. Okay, this trend broke here, right? Look at that trend. Trend is your friend until it's not. So now you have this area here, and we'll see what happens tomorrow. There, at this point, just trades. This poked its head above, I guess, by a millisecond, and then some guys looked for a red dog reversal the other way. It poked above this 102.53, put a high in at 102.73, came back below it. You could have shorted there and said, look at the size of this range. Now I have a calculated short into resistance. Resistance 1. Who knows? So anyway, as far as stocks are concerned, talked about Apple leading the way yesterday, and that how if it went above 108.50, you could see 111, 112, prior resistance or prior support could turn into resistance. Stayed strong all day before failing. And that's exactly what it did. This is trading very methodical, at least. If you look at it both ways, and you don't just have Apple coated glasses. This was your range, right? Up here, gap down after earnings, below the moving average, broke below 122, broke below the 200-day, came in, gave you a quick little red dog reversal, retested this 200-day, failed, gave you another red dog reversal before popping up, making a lower high here, and then broke below. Yesterday, it led the way and then gave you a gap up, traded a little bit above yesterday's highs, but failed in front of bigger resistance. And now we'll see what happens tomorrow. Nothing too calculated here. Maybe if it opens down, it packs and fill a little bit. If it opens up, it's not much you could do about it. We'll see what happens. But all in all, if you had it long overnight, congratulations. It gave you a big green candle to do so. If you sold some strength, awesome. And then, if you shorted into the prior resistance here, good for you. You get a 5-minute candle to see also, how you deal with big gap ups. 2 spots, it kind of, this was the first part of the strength was sold. Then you had one sell here when it broke this triangle. And then really, we talk about gaps, right? So here it broke into this gap a little bit and then came back up. So maybe you didn't get out, but then, when it broke into it the second time, you never know how much of the gap it's going to fill. So if you were long it overnight and sold some strength and said, okay, I'm not going to sell it here because that's too tight, or maybe you did sell it here, but then you're like, oh my goodness, I can't believe I sold it there. I want to bounce back up, and you tried it again. At least here, boom, 4 points lower. And if you're waiting for your H sell setup, by the way, this is your H sell setup. You open up, it it creates this H where you short some strength if that's what you're looking to do. So you're shorting a rally versus just shorting the low. And then once it rolls over, you add to it, and then you get your downside follow through. So you're shorting the H part of the letter H, the lowercase h, into the rally up. And then you catch a little bit of a rollover with good prices. And then you add when momentum breaks, and it breaks the lows here for that acceleration. That's a decent example of the H cell setup, because I talk about during markets that are under pressure in a corrective phase, the only way to really be long is buy in the hole, look for red dog reversals, versus lower pivots, take the trade, maybe hold for a day and a half, and then if you're looking for a sell the strength setup, you look for the H cell setup. Comes down hard, bounces up a little bit, you short the bounce up a little bit versus maybe half of that other day's range or a third, starts to roll over, you add, and then when it takes out the bottom of that prior day, which is the bottom of the H, you add in, you get your follow through, and you then shorted some strength, and you pressed when a level broke. So you had a great average cost. That's a lot of ways people make money short. You know, Evan Lazarus, the CEO of T3 Live, is the king of the H cell setup. He does them all the time and off the charts. You should look at his product off the charts, because everyone is like, Red Dog, you seem to always like to be more comfortable long, or you get out of the way. Well, that's my style. His style is usually short, and he looks for the sell setups. So look at off the charts in the front page of T3 Live. You might enjoy that product, and I think, you know, they'll show you even what they're up this year. Pretty sizable compared to the markets. So what else? You know, Facebook, you know, not much to go on here. Pushed a little bit above. The computers got you a little bit above the prior high and kind of failed. Still a big, you know, big range here. So we'll see if there's any kind of setup for tomorrow. You know, I wouldn't be long it, and I guess if you're shorted, okay, see what happens. Netflix was one of the other stronger stocks. It, you know, gapped up, pushed, and, you know, it didn't give back at all like some other things. Let's see if what's going on here with e-signal. Netflix. Check one more time. All right, Netflix isn't coming up. Let's see if the spiders come back. Oh, there we go. So there's your Netflix. So what did Netflix do? At least Netflix and Facebook held the top third of yesterday's range, so showing you it's a little bit stronger, and now you have a defined resistance here, but it closed on the lows. So this one didn't get above yesterday's high, so those of you who try to short strength, you did okay there. But really, the type of names that were the ones to go after. These are some more rules, okay? In a very strong tape, a stock that closes on the highs on heavy volume and a good trend, typically if the futures are down, that's one you look at that has go-to status that goes red to green. In a weaker tape, or stocks that are in a weak trend that are up a lot like this morning because of the futures, you look for them to stall, and those are the first ones you should short. So I asked my friends from Schoenfeld, what are you guys doing today? He gave me a list of 3 or 4 things that have been in broken trends that they were going to short. One was SanDisk. Okay, what did SanDisk do? All right, my e-signal is going to be, you know, slow now. So, you know, let's just go back to me. And then Baidu, which was at 100 yesterday, and then, you know, closed somewhat strong, was up $7, and that went red and went down $4. And then some of the oil names that didn't really do much. So there's movement. And I think there's a lot better movement now than there was in that range, because at least you didn't get suckered. You know, in that range, every time it looked like we were above 2100, you know, or 2110, it looked like we were going to, you know, go and break out to the upside. And then all of a sudden you had a big gap down and you got trapped. Every time it looked like we were going to break 2040 and people laced in short, we opened up and they got squeezed. So at least things are starting to play by rules. Last week, things broke down on Thursday. You had downside follow through Friday. Monday, downside follow through into capitulation type move. You were able to buy in the hole and then maybe look for a little bit of an oversold bounce. You got that today. Then you had the rollover. So if tomorrow, I think the best setup would be to be down 20 handles or so, and then perhaps look to maybe be a buyer versus Monday's low and see if that holds for a trade. If we happen to open up 20 handles, people are probably going to try and short that or fade that versus today's high and Monday's high. And then until, you know, this lower range works off the condition, and then we figure out what the next move is. But for now, you got to expect the unexpected. You got to keep your size down. You know, I think keep your scope limited. You don't need to be in 100 things. What's working is guys trading 1 or 2 sectors and maybe 2 or 3 or 4 stocks. You know, things you know, so you can measure the composure and be comfortable, and that have liquidity. And you know, a lot of people were saying like, that's the low yesterday, done. And so people today, even before the rollover, like, Red Dog, do you think we make new highs on the year? I'm like, I don't know. That was a hard break. That was a hard break, and now we got to figure out what type of bounce or what type of action we have thereafter. You know, do you think we break Monday's low? I'm like, I'm not sure yet. Let's see again how things develop. And obviously, after a move like today that didn't instill much confidence from the bulls, you know, probably the bears are, you know, growling a little bit louder, saying, wow, you know, first day up after a big break, couldn't even hold that, went negative, even with Europe up and the possibility of China being up overnight. So I would say, again, less is more, cash is a position, take your trades at the extremes, and it's August 25th. If you're not feeling it, go to the beach. Get yourself a suntan, go surfing, go swimming, go run up a mountain, do an Ironman, do something that makes you happy like me. And then after Labor Day, maybe when there's more clarity, you know, a little bit more volume. But the volume's been good. So, there's been a lot of calculated things, and hopefully, following us in the VTF has given you, some good edge, because last week, Wednesday through Friday, no positions on for me, just trades. Over the weekend, no positions, so we were able to catch yesterday's move well. Last night, a little bit of a long exposure. Now I'm back to flat. My gut says I could probably be long something because, that was extreme. Maybe China's up tomorrow or tonight and we bounce a little bit, but it's not worth, the risk. If we gap down tomorrow after today's failure and take out Monday's lows, I'd rather not be in that mess versus looking for a 20-handle gap up to make a little cash flow and then figure it out. So I think there'll be more than enough action if you come in flat, tomorrow to either short a big up open, buy it down open, or maybe there's just not a good setup and you do nothing and you go to the beach early. With all that said, I'll see you tomorrow. Oh, I'll be on CNBC World Markets tonight at 7:30. So if you have that channel, tune in.